Now we're talking. Back to work tonight, guys. Hope you had a fantastic Tuesday. It's back to work tonight. Got a lot of great trades setting up. We're getting ready for Wednesday's trading session. Got a lot of great trades setting up for what could be a very wacky Wednesday. We get some big news tomorrow. We saw some nice short squeezes here today. Can the buyers hold it? Will the sellers take back over control? Not to worry. I'm going to cover all my favorite trades in tonight's video. That way you have a game plan to make some money tomorrow. As always, before we jump in and get this party going tonight, you better make sure you subscribe to our YouTube channel. I don't want you to miss tomorrow night's video. And as always, if you guys enjoy this video tonight, hit that like button for me. Appreciate you guys supporting this YouTube channel. But enough of the intro, right? Let's get ready for Wednesday. Wednesday it could be a pretty wacky Wednesday. We get some big news coming tomorrow, and of course those nice short squeezes that we saw here for this morning. What's going on here in the markets here tonight? We have a flag pattern right now on the Nasdaq, right? It's basically a bull flag on the Nasdaq. We have a trading range on the S&P, and we have a trading range here on the crude oil. Flag patterns are classic continuation patterns, but there's a couple hidden clues on this flag tonight that I want to make sure you're aware of. I can see both reversals and breakouts on our radar for tomorrow. Ranges on the Emini, ranges on the crude oil. These are pretty straightforward. We're buying low, we're selling high, we're focused on breakouts and failed breakouts. There are no shortage of great trades on the Emini, the crude oil, and of course the Nasdaq or the QQQs for us tomorrow. Before we jump in though and take a look at each individual chart and my favorite trades for tomorrow, I just want to make sure we're all on the same page, because tomorrow is not your normal Wednesday. We do have Jerome Powell for his semi-annual testimony on Capitol Hill, and I would imagine tomorrow, with inflation being at record-breaking numbers, with the Fed making a record-breaking rate hike last week, I would imagine everybody is waiting to hear what he's going to say tomorrow, and more importantly, how he will respond to the live Q&A out of the Senate Banking Committee tomorrow. Now, be aware, oftentimes when Jerome Powell speaks like this is not a keynote speech. It's not a convention speech. This is a real testimony. So people will be paying attention. Markets do oftentimes get a bit range bound, a bit sluggish. So my kind of best advice to you, and what I always do whenever he testifies on Capitol Hill, is take whatever the market gives us. We're going to put together our game plan for tonight, but be aware though, at tomorrow morning, once he hits the microphone, things could change very dramatically. So tomorrow morning, we'll be in our trade room, 8 o'clock Eastern time. We'll obviously do our best before he speaks, but I would imagine he will change the game a little bit for us tomorrow once he speaks and once the markets get a chance to react. Expect markets to slow down initially, and then we'll see some picking up, probably about 9:45, 10 o'clock, 10:15. If I had to guess tomorrow, I would guess the best setups will be after 10 a.m. Eastern time. But again, we'll take whatever we can get out of the markets here tomorrow. Remember, trading is a lot like riding a bicycle. It's easier when it's moving. So when it slows down, don't force it. Save your bullets for later on in the morning session when things start to even out, things start to kind of thaw out after he speaks, and the markets begin to get an idea of what they want to do. Again, we're going to put together a pretty solid game plan tonight. That's the one big variable for tomorrow. And again, we continue this parade of Fed speakers here this week. Again, talking about inflation, talking about rates, trying to convince us they're going to give us a nice soft landing off this mess they've put us into over the last couple of years. That is the big news here for tomorrow. So definitely keep that on your radar. And then, of course, in tomorrow night's video, we'll talk about the follow-up testimony and some of the big news we have coming tomorrow. We'll worry about that here on Wednesday night's video. But now you guys know what the big news is for tomorrow. Again, it's not a keynote speech. It is the semi-annual testimony. A couple times a year he gets in front of the Congress and has to explain himself, right, to all of the politicians that have no idea what they're talking about. It should be a good time tomorrow, though. But again, don't force things if they're slow. Now, back to our charts tonight. The Nasdaq's here, S&P's here. Oh, oil is here. Glad to see you are here right along with us. Whether you trade one of these markets or all of these markets, you'll learn something new throughout the entire video tonight. Don't forget, I'll provide different trade variations, different setup ideas, different advanced tactics as we get deeper into this video, and I always try to save the best stuff for towards the end, so don't miss the ending of tonight's lesson. Let's jump right in though. First, the NASDAQ here. The NQ, or of course, a lot of our students right now in our trade room are trading the micro NASDAQ or the ETF counterpart on the QQQs. The NASDAQ is bullish right now with what is basically a bull flag, and you can tell it's a bull flag because there is no reversal. Reversals always jump off the moving average, right? This is a classic bull flag formation. It's a strong move higher, and it kind of grinds down with really kind of the expectation that the buyers are trying to find some sort of lower price to make it worth it for them to buy it back up again. That's basically why bull flags exist. Now, of course, most important clues right now on this chart, we have a very strong move going higher. Anytime we see a strong move in one direction, we really do like to respect that direction. We know that buyers will be looking for a retest of that high. And again, the flag really is, I think, one of the most important factors on this. And it's very important that you understand this is not a reversal just yet. A reversal will pull back, hold, and jump off that moving average like this, right? This is what a reversal looks like when it jumps like that. We need those bears to jump to really get that reversal. So we're bullish, but you'll notice right now it's difficult to find an easy way to buy this market right now. As the market goes lower, I would imagine buyers would love to come in and buy off this 46 level, but you can see for yourself there's going to be a trend line coming down here. That's not going to be a very easy entry to get into. Buyers would definitely love to buy, though, that deeper pullback inside that battle zone. And then I would imagine buyers would also like to buy some breakouts going higher here because, of course, we still have kind of that gap left unfilled way up top there, right around that 11,880 that we talked about in last night's video. So we definitely do have quite a bit of room to go to kind of fulfill that mission that we mentioned in last night's video. But buyers, I'll tell you, they have control right now, but it's not as easy as just buy this pullback because, again, as they pull back, we start getting more bears involved, and that trend line coming down is really going to be a bit of a pain in the butt. How about the bears right now? What do the bears want to do here for tomorrow? The bears, in my eyes, have an easier job. The bears would love to short off the battle zone here, short off the top of that range. Those are some of my favorite trades for tomorrow. And then oftentimes, too, when a flag pattern goes 1, 2, 3, really anything more than 3 pullbacks on that flag, it may start to break down here, and that's exactly where sellers are going to be looking for their entries on that breakdown. Don't forget, we still have that big range from late last week that could easily act as a magnet down here. And remember, once we turn the corner, Wednesday, Thursday, Friday, last week's closing price always becomes a very important psychological magnet for us. So bears, I think, have a little bit easier job right now. Again, the bulls, though, they still have control of this market. How am I going to buy it or sell it? How do I make money knowing these key components here right now? Well, first of all, as the market tries to go higher, I think there's a great shot here right now to trap in some buyers off this high. For example, I've got this trend line drawn off those lows, and these little guys up here, they really make for an attractive area for almost like one of those pop and grind channels that we talk about a lot on this video, right? I like that area. Again, the problem though is the buyers have control of this. So as we go higher here, I'd love to see if I get some buyers trying once, buyers trying twice, and I really would like a trap entry on that two-try failure. Again, it's a bull market, and at this point, we're not way up here, right? If we go up here, now we get a little bit better odds of success. We're not quite high enough yet to be too aggressive, and it's a little bullish, so I like that 1, 2, and I love that trap entry off of that high. That, of course, that trap is necessary to make sure we we don't sell too low. Now, if I can go back up and retest this high, now we've got a lot more space to work with now. Now, let's see if those buyers come in and hold it. If they can hold it for a breakout, now we're on to the upside here. But if the buyers struggle, right? If they try once, if they try twice, one of my favorite techniques is to draw a trend line off that low, off that high. And remember, think about this for example, for a situation for a second. The buyers have tried once, the buyers have tried twice, they've retested that high now. Right now, these are weak hand buyers, right? We have to assume these are buyers who really maybe don't know what they're doing, right? They're the sucker at the poker table. They're buying high right into an area of resistance. And what you want to do is you want to think about, okay, where are their stops going to be? Right? Where are their stops? And use those stops as fuel. One of my favorite reversals, these double top reversals. So if we can get back up to retest this high, then what I like to do is look for this sequence off the high. Buyers trying once, buyers trying twice, stops now are sitting right below that low. Again, as I mentioned before, a trap would be fantastic, or a trend line entry would be fantastic. Any of those will work off that 2-try failure. And then remember, as it rolls over now, this is really where the fun actually begins here. Because now, where does this market want to go? Now, this market has one thing on its mind: to take out that low right there. And one of the easiest follow-up trades is to now hurry up, grab a new channel off that low, market off that high, and then remember, look left and find those little prior swings and try to combine those prior swings with the high of that channel. Okay, this is a 2-try failure off the high. Again, we're selling off the high in a bull market, so we do want 2 tries to trap in those buyers and use their stops as fuel. And then as we start to roll over, it's that first test. Right now, I love traps. Traps are my favorites to sell off the high of that channel. This could also be a failure setup. It could be a pullback setup. It's all the entry setups, all the entry triggers that we talk about and we teach in that free trading course on our website. And guys, I know most of you guys have taken the free course. You've learned all the setups. You know the rules. You know how to time the entry properly with any of our price action setups. But listen, if you're here for the first time right now, if you haven't taken that free course yet to learn all the specific details of when to actually enter, where your stop goes, where your targets go, what I'll do is I'll put a link up here for you in the upper right hand corner. Grab that link, take the free trading course if you've done so already. If you hate missing the best trades each day, or you're taking too many losses, or you're not getting the results that you want, I'll tell you right now, that free class, the roadmap that I teach in that free trading course, it'll get you right back on track, starting to get some good results out of your trading, which I know you guys all want right now. So grab that link. That way, the next time we retest that high and we get that 1, 2, you'll know exactly why you're looking for that short, and then how to time that entry as the market rolls over, right, and dumps back down again. I really like that reversal off that high. But hey, it's a bull market though. So what if the market pumps up and keeps going higher? What do I do in that situation where it breaks out? There are a couple really easy breakout patterns you can look for. One of them is probably the easiest one. It's a 1, 2, 3 breakout, which means we go back up to retest the high. The buyers now come over. They don't try and fail, right, for that reversal. Now they pull back and they jump off that moving average. If they jump off that moving average, now we call these 1, 2, 3 breakouts. 1, 2, and then 3. Remember, that third leg has to really pop, has to really jump off that moving average. That jump gives us the momentum that we need to be able to, of course, now find a new channel, mark or find a new trend line, mark that channel off the low. And then again, I always try to get underneath a prior swing if possible. The bottom line, though, is get underneath the moving average. Look for those bears to try to sell it back in. And once they sell short, now you know you've got their stops. Just easy pickings for that follow-up trade. Where is my target on a situation like this? Remember, the first leg and the third leg are very, very symmetrical. You can see an example here on this chart. I'll show you guys in a second. But remember, on a 1, 2, 3 breakout, that first leg, the size of that first breakout leg, the first leg there, that's the leg we're going to use as the measuring leg as we go higher. We do have overhead resistance, right? We get that 94.25, that 11.75 area overhead. Keep in mind, all of these charts are posted on our blog every evening. You can see the link in the description of this YouTube video. But again, when I get a 1, 2, 3 breakout, it's pretty easy. That first leg, that's the measuring leg. And so no matter which entry pattern we get off of that low, we know how big that measurement leg is. We know how to fine tune that exit as we go higher here, right? Does that make sense? That's called a 1, 2, 3 breakout. Now, I have a couple more breakout patterns I want to go over here tonight. We'll cover more of those on the S&P. All right, the S&P, of course, is very similar to the Nasdaq, and we'll cover some more breakout patterns. There's a couple more I want to go over here that can also be applied to the Nasdaq. Now, as we go lower here, how do I buy it? How do I sell it? This is definitely one of the more challenging parts of this market. As I mentioned before, as we go lower here, there'll be a trend line coming down overhead. So as we pull back here right now, that trend line is the biggest hurdle that we have to get over for the buyers. And it's one of the biggest reasons why I just don't think there's really easy money right now to be made here for these buyers. What you have to do in these cases is you have to basically get up and use that trend line as a level of support. What usually happens is as we pull back lower, the bears will come in. They'll try to short off the moving average. They'll fail. We'll pop up and we'll try again. This is a very simple variation of a 1 try, 2 try failure. That same 1, 2 to sell off that high is the same basic idea of a 1, 2 to buy off of this low. The difference on this one, though, is that trend line is your very best friend. And remember, when it comes to using trend lines, what you want is you want to get some daylight. You want it to go literally up and over and bounce. As I mentioned last night on the video, you really got to be careful in situations like this where it's like 1 and then 2, right? Where it's really tight on top of that trend line, because oftentimes that trend line could be drawn a couple different ways. So you want to think about it as it goes lower, bears once, up, again, get some good separation off that trend line and then back down for that long. Don't forget to draw your trend lines off of those lows for additional levels of support to incorporate on that entry. It's a 2 try failure. We have that, again, that trend line coming down overhead. You'll see a lot of examples of deep pullbacks, 2 try failures. You'll see a lot of examples of those in that free trading class that I mentioned, linked up in the right hand corner. What I really would love to see tomorrow is I would love to see these buyers come in and struggle and start to fall apart here off that high. Keep your eyes open for a pop and grind channel as we go lower. For example, let's say we open up here, we pop down and we grind down. Or let's say we chop around here for a while with Powell speaking tomorrow, and at some point tomorrow, we pop down and begin to grind down. The grinder is always such an easy giveaway, because anytime we pop lower and we start to grind lower, these are not actually sellers selling down here. These are all the buyers who get in earlier. Those are the buyers getting out of the way. I'm going to mark off that low nice and tight. Go up top here. Find some of those big swings up top. And then remember, you want to look left, find those prior swings, try to get up above one of those prior swings. That's almost always where the best entries will be. If you don't have a swing level to work with for a trap setup, get above the moving average, wait for those buyers to come in and try to buy that reversal. Once they do, remember, anytime we see a strong move in one direction, we expect a retest of that low. So let those buyers try to buy that pullback. And again, think about, where is their pain? Where are their stops? Use those stops as fuel to sell right back down to retest a low. Again, first leg, third leg will give you a very good fine-tuned exit on that breakout going lower here. Where do we think the market wants to go at that point? Well, it's pretty easy at this point here. We've got today's low is down at 398 half area. But I mean, again, you've got ranges down here, ranges down here. I would say if the sellers really get their way tomorrow, they'll go right back to that last week's close and maybe all the way down into that range magnet. That would definitely be a pretty big move. But again, with Powell speaking tomorrow and with really this kind of short squeeze we saw today, it could easily happen. This whole move today could easily evaporate on Powell's, whatever he says tomorrow, or even the speculation of what he may say tomorrow. This may end up kind of breaking and grinding down here. I have a couple more breakouts I want to cover here tonight. Again, we've covered a few of these breakouts here right now. Let's cover a few more here now on the E-mini S&P. The S&P is a little bit different than this, but you'll notice here a lot of similarities here on the E-mini as well as the Nasdaq. And of course, again, got a pretty good plan of attack there for the Nasdaq. How about the E-mini S&P here? What's going on the E-mini? Where are the best trades here for tomorrow? Well, first of all, what are the key components here on the S&P? We are definitely bullish. We have a strong move higher. Anytime we see a strong move in one direction, what do we expect? We expect a pullback and a retest of that high. As we always say in these videos, mission accomplished. The buyers have now retested that high, and therefore, unlike the Nasdaq, where the Nasdaq still has kind of unfinished business, if you will, the S&P really, the buyers, they got paid, right? The buyers got fed. They've already got what they want. At this point now, with that retest of that high, now it's a matter of, do we break higher? Do we rotate back down to that big low? Does that rotation get bought up to be back up into that range, or does that rotation break down into a reversal like we talked about on the Nasdaq? This is a really big critical point here right now for the S&P. It does almost feel like the S&P is kind of curled up in the fetal position right now before a pending testimony tomorrow from Jerome Powell. So this range may stay intact here for quite a while, unfortunately. Like I said earlier, when Jerome Powell speaks like this, markets do tend to pay attention, and we got to kind of play with whatever we get here tomorrow, both before and after that testimony tomorrow morning. What another clue here? Another clue is a rotation off the high. Now, it's a range. And so if you think about how ranges work, ranges love to rotate back and forth. So you'll notice they rotate up, they rotate down, they rotate up. Now, when it rotates down here, trying to take out these lows, the reason why this is important is because it builds a lot of momentum. Remember, there's a very big difference between a bull market range that pulls back and goes higher. I can be pretty aggressive on that buy because there's not a lot of bearish momentum. However, if that trading range was to go higher and then come back down, see now there's a lot more momentum coming down. There'll be trend lines coming down. Just like on the Nasdaq, it becomes a lot more difficult for us to buy off of that low. There's a lot more potential now for bears to come in and hold this and reverse. There's also going to be falling resistance coming down here, and you'll have bears that now start to enter this market as it rotates off that high. That is a really big part of it, and you can see that trend line I've got drawn down as a reminder for us as we go here. So again, buyers have control of this, but not the easiest situation here to be a buyer. Now, we talked about earlier, we talked on the Nasdaq how going higher we can look for those twos. The one thing you want to keep in mind though on this one though is it does look like there's a trend line coming up off of this low. So as we try to go higher, if we go higher here, what you have to remember is that trend line will be an issue for us. And we want to, of course, use those two try failures. But in order to avoid selling into that trend line, we have to use a trap setup off of that high. So be very careful trying to sell off that high right now, because again, you can see that trend line coming up. We're going to use that same 2-try failure for that reversal, but that trap really is one of the most important parts of this. This will really all depend on how much space we have between that trend line and that high. As that space gets smaller, the odds of our success get lower because there simply isn't as much reward. There isn't as much meat on the bone, if you will. As we go higher here, we can also grab that 1, 2, 3 breakout, that push up, pull back, and that breakout going higher. Again, we are still a bull market right now, so a breakout going higher would make perfect sense. Just remember, though, we have to hold that pullback. It's not enough to see a strong breakout. They have to hold that pullback, or else they're going to fail and go back down into that trading range. If they do hold that 1, 2, 3 breakout, now I can go out, mark off that high, mark off that low, and just like on the Nasdaq, I want that first test. And again, it could be a trap below a prior swing. It could be a failure underneath the moving average. Again, you guys will learn those smaller details. The entry triggers, you'll learn that in that video course linked up in the upper right-hand corner. There are a lot of examples of 1, 2, 3 breakouts of how we apply them to our favorite markets in our trade room. I would also keep in mind here for a breakout that pop and grind. The pop and grind is very possible here, especially because, remember, in the big picture right now, it looks like we're in the middle of nowhere right now, because we are. But in the big picture right now, this is the same thing for NASDAQ too. NASDAQ's in the same exact spot. All this will apply to the NASDAQ as well. You can see that big rush. That was the response the last time the Fed spoke, right? That was last Thursday, which was reaction day after that messy FOMC announcement. So if the market pushes higher here, we know where it wants to go. And again, there's something very similar to this on the NASDAQ as well. So this will also apply to the NQ. The key, though, is, again, make no mistake about it, we're range bound right now, and ahead of a Fed speaker tomorrow, we got to be careful buying breakouts right now. But if they can pop up and grind higher now it's pretty easy. We mark off that high, we mark off that big low, we find those prior swings, we can get under prior swings for trap setups, we can get below moving averages for failure setups, and then of course as we pull back to that moving average now, we can grab that pullback combination. Remember, first leg is the measuring leg. That will tell you where to fine tune that third leg target as we go higher. And again, it could be a trap, it could be a failure, it could be a pullback combination. You'll learn all that stuff inside the free class. That way we're not going over the details here on this video. The video will be long enough already. Remember, market wants to go back and retest that high. Right, so make sure you take some profit off at that high, and then use that first leg, third leg technique as we go higher here. One more for us would be a 2-try breakout. Again, this would also apply to the NASDAQ as well. Now, these ones are a little more, they have to be a little bit more dramatic, right? So now imagine we go pop, 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 right? Big, strong push in the overnight, or maybe we go sideways here, and then Powell speaks and it pops. Whatever the case may be, if it really rips and runs higher here, okay, it's not popping up, pulling back, and jumping like a 1, 2, 3, right? It's not popping and grinding like a pop and grind. It's just ripping higher. When it rips higher like that, all of that momentum tells you what? You're going to probably get another leg. So as the market runs higher, if you get a shallow pullback, a higher high in price, the big money, the smart money, the experienced traders, they're waiting to get off that trap. Okay, I love those types of setups. We call them 2-try breakouts or 2-try traps in our trade room. Remember, strong move, shallow pullback, higher high. The strong move gets the momentum going. The shallow pullback drives all the buyers crazy because they're not getting a low entry. And that higher high basically confirms it's not just a V-top, right? That higher high is a really important part of it. Okay, remember, don't fall for the lower highs. The lower highs are not the one you want, right? Those become flags like we're seeing on the NASDAQ right now. That 2-try trap is another one. On this one, it's a little more difficult to find your final target. On this one, though, we'll try to leave that. Look at all that space up there, right? All that open space up there, 38.29, 38.42, 38.43. That's the big top up there. I would be pretty impressed tomorrow if the buyers ran all the way back up to that big top, that kind of Fed top that we saw middle of the last week. But again, with Powell speaking tomorrow, who knows, right? Who knows? Now, as we try to roll over, right? As we roll over, probably the easiest trade here, if this market does roll over here, because again, if it does roll over and go lower, we've got this trend line coming down. So again, kind of the same thing on the Nasdaq. We've got to go 1 and 2 because again, it's that rotation off the high. We have to get those bears trying once, trying twice because it is so bearish with the rotation off the high. And with that trend line coming down, we have to be able to grab that bounce off that trend line, draw that support trend line there. Remember, the key to these is you want to get that, you want to see daylight in between the candlesticks and the trend lines. Be very careful with these getting too aggressive off that little tiny breakout pullback. You almost want it to go up and then go, oh shoot, come back and then get the entry right off that trend line. And of course, you'll learn all about the right signal candles, the right entry time frames in that free class. It's a 2-try failure bouncing off that trend line for that rotation back up back to the top of that range. And then potentially at that point now, back up to take out those highs. There's a big triangle level down here, big triangle. Triangles are very, very common support levels in a range market. So keep an eye on that long trade off those lows. I'll tell you right now, though, the easier trade on this would be if it takes out that low, we pull back, and we blast, right? That'll be a 1, 2, 3 breakout. Mark that low, mark that high, grab that first test, call it a trap, call it a failure. That is a really, really easy trade to qualify for tomorrow. It's nothing more than a rotation, a pullback, and a hold, right? It breaks off of that moving average. It's an easy winner off the high of that channel. Or again, pop down and we begin to grind and really break down through these key areas of support here. This is also a very easy trade. Find that low, mark up off those big highs up there, right? Look left to find those prior swings. And don't miss that first test off of that high. So keep your eyes on those reversals as we go down. I would not be surprised if on the NASDAQ and the S&P we see something like that as it rotates back down. There just may not be enough buyers there to want to be able to save the day here on this because of the inflationary mess that we're in right now. Again, but we're bullish right now, right? We are bullish. So a lot of these shorts, we really have to kind of wait and see how this market sets up here right now. But at least we have a really good game plan for trading breakouts, trading reversals. Now it's up to J Pow tomorrow to kind of show his cards and see how the markets are going to react to it. So we wrap things up on oil. Oil is another range market here tonight. And by the way, a little bit of kudos for you. If you are watching this video right now, 35 minutes into this video right now, I really applaud your commitment. I'll tell you right now, if you're willing to put this much commitment into my YouTube videos, I can only imagine how well you'll do with my video classes as a member and how well you'll do in our trade room. You know, I always tell our students, if you're willing to put a little bit of effort in with me in the trade room, you're going to get great results. So if you're willing to put this much effort into these free videos right now, I'll tell you, you have a very bright future with us in our trade room. So definitely get registered. And also, since you're still watching right now, do me a favor, would you? Let me know in the comment section below, what's the biggest obstacle for you and your trading right now? Is it figuring out the day type, right? Range of trends? Is it finding levels of support and resistance? Is it timing the entries properly? Is it trade management? Is it psychology or mindset? What do you think? If you could wave a magic wand and have one thing get better tomorrow, what would it be? Would you do me a favor? Drop that in the comment section for me. While you're down there, hit that like button. I'd love to know, because if you're still watching this video right now, you are the person I do these lessons for and put all this time into it every day for. So I would love to hear your feedback on what's most important for you. Appreciate the comments in the comment section. Now, back to our chart here on the crude oil. Oil is a relatively straightforward situation. We are bullish, but I say the word bullish with a little bit of a hesitancy here right now. You can definitely see the battle of 110 continues. We talked about this last night. There is this line in the sand right now. Well, you can see it for yourself here. We've got that big bear move down, right? This, of course, was that holy crap, inflation's kicking us all in the pants right now. That kind of puke that all the markets did last week dragged oil right along with it. Kind of that, everything's too expensive type of puke we saw last week. Now, look where we are. We're right at that area, and I kind of have nicknamed this the Battle of 110. Because really, if we can stay below 110, we'll probably get back around that 108, 107 half area. But if we can't stay below 110, look at all that open space above us. So if the buyers, if they can get their act together right now and get and hold above these highs here, you've got 115 just begging to be re-hit. Right? We'll probably have a summer season of some very high gas prices if this battle of 110 goes for the buyers here. If the bears can hold this right now, though, remember, that's a real strong move down. So they're going to want to go back and retest that low and possibly spit out the other end down to that 105 area. It does kind of feel like right now we're either going to be rotating around 110 to 115. It kind of feels like 110 to 115, or it feels like 110 right to 105. It's that battle of 110 is basically what we're looking at here, which really may be one of the most significant things we see this summer. Because of course we're going into a very high demand summer driving season, and so this does seem to be quite significant because of the time of the year that it's happening right now. So again, we do have it's a bull market into a trading range right now, and you'll notice what's happened, right? We've rotated down, we rotated up, and now we're rotating back down again. What do we talk about with rotation off the high? It's still bullish, right? We haven't exactly jumped off that moving average. We haven't got the full-blown reversal yet, but you can definitely tell a lot of momentum. And see what's happening right now? The bears are tried once, the bears are tried twice, and they were met with more sellers. See that? More bears are coming in and selling into it as they go. So again, it's still a bull market. We are definitely in a range right now, but unless something changes here overnight, we do not look very confident here. The buyers do appear to be struggling. And then I think one very big clue here is we're basically sitting at that major area of resistance, again, the battle of 110, and we have a range down below us. So we get a range acting as a magnet here. If the buyers can't get their act together here right now, I would imagine we're going to sink back down into that trading range and want to take out that 106.40 level, that low that we saw after the big puke last week. So we kind of know what's going on here right now. Again, it's a little bit of a bullish, well, not a little bit. It has a bullish tone to it, but the buyers are struggling. So what do the buyers want to do? What do the bears want to do? The bears have a pretty easy, well, maybe not easy right now, but the bears would love to go up and sell off that high. The bears would love to break down and sell that breakdown, just like we talked about on the S&P and the Nasdaq. What do the buyers want? Well, the buyers, in all reality, those buyers have already been given a ton of opportunities right now. At this point, we've got to put up or shut up, right? We have to do something now for the buyers. We have to get some strength going higher here. And the buyers, I mean, again, earlier today, yeah, we would look for that buy, but and at this point now, it's very difficult to justify being a buyer at this point. The buyers appear to be very, very weak at this point. So buyers need a breakout going higher, and we'll gladly trade that breakout going higher. But we need to get something going here for these bulls. So as the market now goes higher here, there definitely will be a rising support trend line here. We'll want to keep an eye on that. But this is exactly the same situation. Let's get back up to retest the high. I've got my trend line coming down, my hidden channel overhead here. Lots of areas of resistance up overhead. I like that pop up. Again, we're bullish. So because of that, it's a 1, to failure off that high, and then as we go lower, we can find that channel low, mark off that channel high. Same thing we've talked about here quite a bit already. It's that 2-try failure off the high. Why 2 tries? Because of the bullish short-term momentum. We're doing it at a level of resistance above that trading range and finding that rotation as it rotates back down, back to where? Back to retest those lows, right? That's why they want to take out those lows here. Now, if the buyers can get a small miracle, if they can, well, I shouldn't say small miracle. It is an overall, bull market here still, but still, if they can hold that pullback and blast, right? What's that called? 1, 2, 3 breakout. Then what do? We mark off that high, we mark off that low, we drill down to our faster time frame, and we find a trap, a failure, a pullback combo. Right? We know where the market wants to go at that point. It wants to go back to 115. However, the first leg and the third leg are very, very symmetrical, right? So keep that on your radar to fine tune that exit target. And again, keep an eye out for that pop and grind too. Those are always great channels as well. Pop and grind, find those traps, these are the best ones, and keep it going off that low. Right? Those are pretty easy trades as we go higher. That 2-try trap, real strong move up, shallow pullback, higher high in price, right? Love those 2-try traps. Those are fantastic trades as well. So we'll keep an eye on those breakouts as we go higher here. As we go lower, or if we go lower, remember we got Powell tomorrow morning, so stay out of the middle. Right? If it's chopping around 110, stay out of trouble, stay out of the middle, sit on hands in the middle. If we do start seeing this thing roll over though, 1, 2, 3 going lower, we know where the market wants to go. We find that new channel, mark it off that high, drill down to your entry time frame, right? We're not trading a 15-minute tick chart in the trade room. Drill down and we'll grab that 1, 2, 3. And of course, that first test off the high, that'll usually be just above the moving average for a trap or a failure setup as we go. And then of course, a pop and a grind going lower. I love these channels right now. Mark that low, mark that high, get back above. Again, grab that trap, grab that failure above the moving average, and then grab that pullback off the EMA on the way down. Trap, failure is selling right into those stops, and then of course that pullback setup on the way down to where? On the way back down to that 106.40 area. And then if we were to end up all the way back at that low, right, then we start thinking about that 1, 2, and then back up into that range back above. That same 2-try failure to run those stops going back higher again, right? We'll talk more about that tomorrow morning in the trade room, obviously. We'll have to wait and see what we get here tonight, and of course into tomorrow's Jerome Powell's testimony at 9:30 Eastern time. But now we have a great game plan, all locked and loaded and ready for tomorrow. Remember that big news event at 9:30 Eastern time, and also too, don't forget to join us tomorrow in our trade room. If you're brand new at this, or maybe you're an experienced trader, but you haven't been able to quite put the pieces together in a real good formula yet. If you're looking for a great place to learn and trade along, if you're tired of missing the best trades each day, you'll love our trade room. I have all the worksheets to trade right along with me. If you put a little bit of effort into the trade room with me, you're going to love your results. What I'll do is I'll put all of the membership links, all the free course links. I'll put all that stuff either below this video tonight on the website or in the description of the YouTube video. So grab those links, and while you're down there, make sure you subscribe, hit that like button, and again, let me know what's the biggest obstacle standing between you and success in your own trading. I will talk more about that here on our videos coming up here next time. All right, guys, that's it for me. As always, be well out there. Be nice to each other, will ya? And you better be back here tomorrow. Hopefully, I'll see you tomorrow morning as a student in our trade room. That's it, guys. Be well. Be nice. Adios, amigos. Bye-bye for now.